It's Tuesday, that means it's Trading Tip Tuesday. A very common question I get frequently is, hey Josh, what is the stop loss for that trade? How do I calculate stop losses? How do I think about stop losses? What do I do with this trade? Where's my exit if it goes against me? So in my mind, there's kind of two types of stop losses: absolute stop losses and trailing stop losses. While stop losses are pretty much straightforward for any trade, they're also highly specific to the trader based on their size, leverage, max pain. So I'll stay fairly broad with my description here. Just know that it can change based on your personal trading style. So let's look at an active example. Let's look at some absolutes first. We'll get to the trailings at the end. Let's say we have a chart pattern where there's a specific target in mind. Adam and Eve, W double bottom, descending volume profile. For most patterns, the stop loss is built in. It's either a higher high or a lower low. You'll hear me say that a lot this video. But when you're looking for a stop loss, the answer is right in front of you. If you're making higher highs or lower lows on a macro scale, you're probably in trouble, right? If you're on the opposite side of that. So let's say you were long on the horizontal break here. Where's your stop loss? Based on the pattern, it's around 860. Now your personal max pain for this trade may be higher. You can always cut percentages of this as this goes down. Maybe you cut 10 to 20% if it breaks 10, more if it breaks 9, and then all of the rest of it at 860. But that's up to you. One thing you don't necessarily want to be doing is adding to the position unless you're super confident and comfortable that this is going to go higher. Let's look at another example, BTC back in early 2020. Again, chart pattern, descending volume profile. The setup looks like it's there. What's my absolute stop loss here? 69.50. Again, if this broke down slightly, you could cut percentages of it. The risk reward calculation isn't always going to look good, right? It's 1 here, it's 0.9 here. It isn't always going to look great. But after you break the horizontal resistance, then you can move the stop loss up either to break even or slightly below break even. So at the very least, you don't have a big losing trade on your hands. You can let the runners run, and at that point you can set trailing stop losses. Looking at another example, BTC early 2019. We have an ascending triangle. Again, the stop loss is built in to what's going on with the chart. If we get a lower low here on a daily candle close, which is really important because a lot of people, or some people, tend to put their stop losses on the order book. And if there's a wick one way or the other, you can get stopped out very easily. So it may surprise people when I tell them I don't really use stop losses too much, especially on the order book, unless I have a large position size or I'm asleep, something like that, where you're stepping away from the screen. For the most part, stop losses should be used as a psychological, emotional tool to say to yourself, all right, I was wrong. It's hard for people to say, to admit to themselves, I was wrong, I'm on the wrong side of this trade, I need to get out. So in this case, a lower low at 39 would have been the stop loss. The risk reward ratio is 3 here, so it's a little better. And this obviously went on much higher without hitting the stop loss. Here's another ascending triangle on ETH. Where's the stop loss? Again, a lower low on a daily candle close. And let's say you are in a long position after it breaks the horizontal resistance. And like I mentioned, you can move your stop loss to break even or just below break even. Again, mentally, not necessarily on the order book, because if you do that and this wicks against you to break even, which for chart patterns, it typically hits the throwback back to the horizontal resistance to confirm the support, it'll stop you out prematurely, right? When you're thinking of stop losses, you always have to think about the macro situation. You know, this is a multi-month chart pattern that's broken to the upside. There's a strong expectation that this hits the 1618 or the measured move. So I don't want to throw away an entire position that took months to set up on a single wick because I'm impatient, right? So you have to be cautious with that when you're setting stop losses, not to get too aggressive when there's an expectation of a large move. And if we talk about trailing stop losses, talking about the trend trade, I like to turn on high time frame chart. This is the weekly Bitcoin chart, looking at the 20 SMA and Williams fractals. So one of these fractals will print if you get a low high low or a high low high. And again, this is all about making higher highs or making lower lows. So first you have your litmus test of your moving average or whatever your trend metric is. If we're above the moving average, we're bullish. If we're below, we're bearish. So we're above, we're long. What is our trailing stop loss going to be? We can use these fractals. They print and continue to print as higher lows are set. So you can see where they are as we go. This is multi-year. This is unusual in the crypto realm, but it's something to watch for, especially for the current situation for BTC. If we get another multi-year situation, a lot of people get impatient. A lot of people panic on any move that's 10, 20% down over the week. You know, look at all these lows we put in where if you got out early, you know, if you didn't let runners run and you're panicking because it looks bad, right? And it did look bad at the time. All these looked bad. Obviously this is hindsight, but you know, this is where your mind should be. It should be, what is my trailing stop loss? There's another level here. But you can see how simple and easy this is. It takes the emotion out of the equation. Another stop loss you can use is the litmus test to the MA itself. If we get multiple candle closes below the 20 SMA, then you can say to yourself, all right, clearly the trend has shifted, right? And ultimately the fractal stop loss didn't hit until June 11th. So you can see how long, it's like a 2-year trade on the macro side. And for these high time frame stop losses, this is where I feel comfortable going to cash instead of hodling. Instead of hodling, you're like, you know what, the chart is the chart, and it's time to buy the dips rather than hold the long side of the trade. You can see how late this is relative to the top, but it is a good example of when you should be convinced that maybe the trend is over, right? Let's look at the short side of that. Same thing, we're below the 20, below the 20. We can't get successive closes above the 20 here. We can't get a single higher high until April 2019. And we get not only multiple candle closes above the 20, but a short stop loss with a higher high. So you can use stop losses as entries. In this case, you know, if you weren't long yet and the short got stopped out, it's a good long entry as well. Something to consider. So the current situation for BTC, what's my macro stop loss? 9.7. What's the 20 SMA? Multiple days below 10.5 would be bearish. Trend is over situation. If we look at ETH, same story, 20 SMA, fractal, 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 higher, high, higher, or higher low, higher low, higher low, higher low, out in March. Saves you from all of this pain. Let's look at the short side of that. Same story, below the 20, fractal, 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 fractal. No entry until April. No stop loss until April. So currently for ETH, it's 300 based on fractals, 350 based on the 20 SMA. Easy, simple, straightforward. I don't have to think about it. I can just turn on the chart. It does it for me. Let's look at another situation. Monero. Let's say you were long from December 9th randomly, just a random day, no specific reason. And you're in this trade. Where's your stop loss here, right? You can see there's some sort of trend channel maybe. There's something going on. It's at sort of local highs. It's making multi-month highs. Are you impatient? You know, you're thinking, this looks kind of weak, right? You got this spinning top candlestick, all this stuff, whatever. But if I look at the high time frame, again, weekly chart, high time frame fractal, it's at 73. So me personally, I'm not too concerned. We should get more fractal prints here at least above 100, I'd imagine, before this rolls over. Now, this could always be a March situation where you didn't get any fractals on the way up, but I'm optimistic that we'll get fractals here. You can also use the pitchfork as a stop loss for your hodl position. This is Link USD on the daily. The stop loss for the long side is anything below this purple diagonal. We're talking about a daily close below the purple. It has never happened. Currently it's around $7.50, $8, something like that. Very easy, straightforward. You don't have to think about it, right? Like, this is the rate of change for the trend. If we deviate significantly from that, you're out. Let's look at the MA multiplier. Again, Link USD. Let's say you want a little bit more of a finesse on your stop loss as far as the top side of it. You can look at the multiplier here. So this is the half year MA. This is the MA multiplier up here. And one way I've been looking at these is when price breaks below the MA multiplier, then you're stopped out of the long side of this trade. That helps you capture the entire upside from the lows very nicely in both of these cases. Another thing with stop losses, if you're not backtesting it, you're doing it wrong. You need to backtest a little bit. And if you're backtesting it and it gives you poor results, then you need to rethink the situation. You know, if I'm backtesting these fractals and MAs and it looks really good, which it does historically, I'm pretty confident going forward that it's going to work out. If we look at a different type of situation, let's say we're knife catching. Let's say we know we're just completely bearish, right? This is LTC, BTC. Where's my stop loss here? I get this question a lot too. For me, if you're longing the short side of the trade, you're counter trend trading. So you got to think of it like that. You can't really have a stop loss because this could go who knows where, right? Maybe you want like 50% of your trade. If you're down 50%, maybe that's your stop loss. But the expectation here is lower lows. So to put in a stop loss is you're just kind of like kneecapping yourself because the expectation is the long side is going to get bulldozed here. So it's hard to even have a stop loss when you're knife catching. Hopefully you're nibbling with small size and you're not just going all in when you see stuff like this. I mean, EOS is the same thing. Maybe there's a falling wedge here. Maybe there's a bullish divergence, but the expectation is lower lows. You're breaking successive lower lows for multiple months. This should go lower, right? So it's hard to put in a stop loss there. And then let's just talk about one last thing with this parabolic moves in crypto, which happen frequently. When parabolic moves happen, emotions are high, judgment is clouded. It's harder to figure out where to close a position. It really is. Because naturally you're just keyed into the chart a little bit more. This is the 4-hour ETH chart. I talked about this last week, but if we use these diagonal lines, again, we're using the series of lower lows in this case if we're on the long side. Higher lows, excuse me. So use the ray tool on TradingView, pick 2 points, draw a diagonal, pick the next 2 points, draw a diagonal. And until we break these levels, the trend is valid, the situation is bullish. There shouldn't be any expectation of reversal. Until we start breaking these diagonals, which we do sometime in mid-February, then you can say, all right, this trend is weakening, the bullish side is weakening, I should be easing off the position here, closing some of it, getting stopped out of some of it, and eventually we just break several diagonals and it's just game over. Same thing with BTC, this is 2017, draw diagonals on the lows, right? This is the 4-hour chart, emotions were high, who knows where the sucker's going, right? It's just price discovery for days and days and days, nonstop price discovery. The number is kind of irrelevant, right? Like if we're looking at stop losses, because this could just keep going and going and going, which it did. You know, it didn't break these diagonals until mid-December, and it broke 2 of them, and that was clearly game over, right? So hopefully it's more straightforward now, more intuitive. You want to do some back testing. You want to figure out what works best for you. But if you're long, you don't want to break lower lows. If you're short, you don't want to break higher highs. That's the first indicator that you're in trouble there on that trade. If you've got any specific examples, you can leave them in the comments below and I can discuss them there. Happy trading.